What's up, everyone? It's Scotty with MoneyVest. So markets continue to power through with a very strong rally, with the Dow, of course, trading at an all-time high. It is greenery and it is gains all over the place. TMF also pushing higher, with Enphase having a phenomenal day, up a little bit in the double digits, 12, 13, 14%. LABU pushing higher, Tesla up a little bit over 5%. So it is absolutely an extreme euphoria right now, with lots of momentum coming in for a lot of stocks. Hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time, and links to our Discord and Patreon is going to be down below if you want to access all the members only private videos, Excel spreadsheets, 40 plus videos and tutorials. In fact, I added and uploaded one more new video today going over how and why I'm buying and heavily investing in this one area in the market. So definitely do check that out. This right here is going to be that video that I posted. So new private members only video, investing heavily here and buying more. So that's the link. And again, you can go and watch this video. It's a 7-minute video where I go over why I'm buying heavily in this particular market. And of course, go over my portfolio in that market as well. So definitely do check that out. Link's going to be down below. And also do connect with me on Instagram. I do post a lot of updates and videos and polls and strategies and tips and all that stuff. And the last 2 days have been wild. Up 28K in the last 2 days. This market is quite literally high, with Enphase and Tesla for the win. So again, connect with me on Instagram. My handle is going to be CASWRP, and definitely do check out the Patreon with a link down below. I've opened up a few more spots with that 16% annual discount that's available now all the way through the end of December for New Year's. And also check out the courses down below: fundamentals, technicals, options, and psychology. And we're going to be starting our Christmas sale very soon. Now, going over to the market, we did have a little bit of rotation out of big tech, I would say. So Magnificent Seven definitely not seeing as much momentum. Google, Meta was down, Amazon was down, Microsoft was down, Adobe, Oracle, Palo Alto Networks. We did have Apple basically flat. So what we are witnessing is 5 to 6 areas in the market that are really seeing a lot of momentum. And this is something that I talked about in our previous videos. I've mentioned this quite a few times actually. Before the rates even started dropping, I mentioned this specific thing where, in my opinion, there are 6 to 7 areas to really look at. I mentioned that money is rotating out of Magnificent Seven over to other parts of the market, more risk on parts of the market. Watch for these areas in the markets for alpha as rates continue to drop. And these, of course, are IWM. IWM small caps have had a very strong momentum, especially on the day today. I think they're up close to 1 to 2% here. So if you come over to IWM, the Russell 2000 index is up a little bit over 2.7. Take a look at that. Very nicely up. And of course, yesterday it was up another 3.3% as well. So very strong move to the upside. Of course, it's gotten way too overbought right now, but this is, of course, one of the areas in the market where I mentioned as rates drop, it's going to benefit this sector. It's going to benefit this part of the market. The second one, of course, is crypto, and crypto has been rallying quite aggressively, as we already know. Bitcoin recovering back higher, up to almost 43,000, with Ether also just under 2,300. Not to mention a lot of crypto stocks like Mara was up 6.3%. The stock's up like 400% year to date. CleanSpark's up 6.5%. Riot's up 3.3%. Coinbase is up over 2% as well. So another area in the markets which is seeing a lot of momentum, and of course a lot of bullish sentiment as rates continue to come down. Now, third one is going to be high growth. High growth is especially not big tech or Magnificent Seven, but high growth is somewhat small to mid cap companies that are not necessarily profitable or generating positive cash flows. So these companies could include, the likes of, let's say, Upstart or even Square, or SoFi, for example, was up 6%. Neo was up over 5.7%. Of course, biotech, LABU was up a little bit over 5.3%. So biotech is also part of the overall analysis here. Bonds, TLT, TMF, something that we have already talked about. So another really important part of the market sector or place in the market, which is also going to be doing really well. TMF was up another 7.5%, up to $65. So I did a video on TMF earlier. Congratulations to anyone who's been trading or investing in TMF. I'm genuinely really happy that this trade is now finally working out, because we've waited patiently for this trade the entire year, and we had our analysis pinned down with conviction that rates eventually are going to come down. And guess what? They are indeed coming down, with the 10-year yields now dropping under 4%, which is a big threshold to break down for the yields. It's at 3.9.5%, and as a result, TMF absolutely going crazy at over $65 per share at over 7% at the moment. So very strong move to the upside. And finally, we got solar and renewables. Solar and renewables, of course, are going to be the likes of Enphase Energy, and of course, not to mention other solar renewable companies. Enphase had a massive move to the upside, up almost 12% on the back of these potential rate cuts, back up to over $120. I am back in the green in one of my positions. The other ones I'm only down about 10% now, but a very strong move to the upside, and it's rallied a little bit from $75 to over $120 and a 63% gain in the last several weeks. So that's where we are. That's what I wanted to go over. And again, if you want to get access to a lot of these alerts and find out what my analysis is, it's going to be very actionable sort of stuff. I'm not going to be going over in circles with analysis, but I'm really going to go over, okay, this is what it is. This is where I see the markets, and this is what I'm personally doing, or this is where I'm looking at investing moving forward. So I'm going to give you some ideas for what to look into and doing your due diligence or additional research on these parts of the market as well. So again, link's going to be down below if you want to join, of course, be a part of our Money Invest community. I would really appreciate that. So going over to how the markets perform. So all 11 sectors are actually green on the last 1 week, except for comm services. Comm services is the only sector that is struggling a little bit. And in the last 1 day, of course, we do have real estate, energy, basic materials, industrials, consumer cyclicals, financials, all pushing higher, with utilities and consumer defenses pulling back. And in the last 1 month, of course, we do have a lot of sectors pushing higher. Energy is the only one that is struggling a little bit because oil prices have sold off. Lean hogs, orange juice, natural gas, sugar, Nikkei, everything pushing higher, with oats and palladium pulling back. And we got Bitcoin just a little bit under 43,000, with Ether just under 2,300 as well. Investors should treat the stock market rally with caution, advisors warn. So don't fall prey to the irrational exuberance. This was Ted Jenkins, certified financial planner and the founder and CEO of Oxygen Financial in Atlanta. He's also a member of CNBC Advisory Council. Things are never as bad nor as good as they seem. Over the last year, the S&P is up roughly more than 19%, of the Dow Jones Industrial Average has risen 11% as the markets close Wednesday. A $1 million investment in the S&P on December 12th, 2022 would be worth nearly $1.2 million today. Of course, a $200,000 gain considering the markets are up almost 20% in that time period. Again, this was the video that I posted earlier today. I do think that it is really important to diversify away from the US markets over to other parts of the market, other parts of the world as well. And this video kind of encapsulates that idea really well. So definitely do check that out. Now, going over to the S&P 500, take a look at the momentum. I mean, just absolutely incredible. Up another 26 basis points. However, today's candle, quite an interesting one, a little bit of a doji candle. RSI extremely overbought at almost 80, and so is the MACD. I hate to break it to you guys, but this does not look super great from a potential upside standpoint. I think we can all agree. I think we can all be on the same page on this idea that we are extremely overbought and overextended with the RSI as high as it is. And the candle itself, with the doji candle coming up to its resistance at 47.27, 47.30, definitely does suggest there is possibility for us to pull back, which again, we've been talking about for quite some time, but markets can continue to remain overbought longer then we can remain solvent. So it's not like a straight up short trade idea right away, but we need some confirmation. We need some signs of actual weakness or some evidence that, okay, the markets are showing signs of weakness and we can potentially start rolling right back down. But until then, the markets are on a very powerful rally at the moment. NASDAQ here, up over 19 basis points. So it was, again, a little bit more of a volatile day with some consolidation and a little bit of a doji candle. Support level is going to stay put at 14,600 all the way down to as low as 14,400. So those right there are going to be some levels to watch. Of course, extremely overbought at over 75 in the RSI and the MACD also moving up. And support level all the way down to sub 14,000 is also going to be the one to watch for the NASDAQ. Going over to Apple, and Apple here also continues to move higher very nicely, 8 basis points. Did it hit an all-time high? Yes, it did, $199.62, a new all-time high for Apple. Support level is going to stay put at $196, closer to $197 for the company at the moment. Talking about Amazon, Amazon also here getting a little bit of a pullback, 95 basis points. It's mostly been consolidating sideways in that range, and right now, of course, this right here is going to be that resistance because we're back under 148, and support level is going to stay put down to $140, $243 per share for Amazon, all the way down to inside this green rectangle at roughly 135 for Amazon moving forward. Talking a little bit about Tesla, and Tesla here with a very nice move to the upside, up almost 5%, with a huge breakout above 251. And again, we're still been trading in this downtrending channel of lower highs and lower lows. And the next target and resistance going to be all the way up to 269 to $270. And of course, we've got a massive amount of supply sitting roughly at 280 to as much as $310, $320 per share. So those right there are going to be some levels to watch with a very nice move to the upside for Tesla, and support level is going to stay put at $240 per share. Next one on the list is going to be PayPal, and PayPal has actually been doing really well, getting up to that resistance at $65, up about 23 basis points on the day. So not a huge move, but definitely seeing some momentum back higher with a support level at $56, $57, with a resistance all the way up to $65 per share for PayPal. So very nice move to the upside with a higher high and higher low. Support level, like I said, at 56, resistance all the way up to $65 for the company. Talking about Visa, and Visa here starting to pull back. Not a surprise considering how overbought and overextended it really got. So down about 1.39%. So really what we are witnessing is not the big tech, high quality businesses, large cap businesses. They're not the ones that are actually pushing higher, but it's really just a very risk on environment on the back of rates going down with the sectors and industries that I highlighted earlier. They're the ones that are actually seeing a lot of momentum to the upside, and the more established, more mature companies are not really seeing a lot of momentum. I mean, my portfolio was up over 16,000 on the back of Enphase and Tesla. They were the main reasons as to why we were seeing a lot of momentum. But of course, other parts of the market are starting to see some rotation out, because it's not just broad-based rally. It's mostly growth, high growth tech, biotech, solar, small caps, cryptos, and bonds. Those are the areas that I just mentioned are the ones that are actually seeing a lot of momentum. Magnificent Seven and large cap tech, higher quality companies like including Visa and the likes of Starbucks or Dropbox or CVS, like they're not seeing a lot of momentum, right? So they're starting to see a bit of a pullback, as we are seeing a bit of a rotation out of those parts of the market over to other ones that I just mentioned. So support level is going to sit at $250 down to $245 for Visa. Talking a little bit about NVIDIA now. And NVIDIA, again, very, very flat. So not really a lot of momentum higher. So 0.5% up. This right here is inside this red rectangle. So an area of resistance, and the support level is going to stay put right here inside this green rectangle for NVIDIA. Lots of consolidation sideways between that $400 and $500 level for NVIDIA. So we're seeing a lot of consolidation in between that range for NVIDIA. Talking about advanced micro devices, and AMD here also just going sideways, a little bit over 14 basis points, just over 138. Support level is going to stay put at about $130 per share for AMD. And of course, all the way down to as low as $112 per share for advanced micro devices. A very, very strong move to the upside with an RSI and a MACD absolutely going crazy with a lot of momentum to the upside at the moment. So 75 RSI, MACD also pushing higher. Support level is going to stay put at $130 all the way down to $112 per share for advanced micro devices. Talking about Meta, and Meta here just pushing higher very nicely within the context of this uptrend of higher highs and higher lows. So this right here is going to be that support inside this green rectangle, sitting roughly at around $310, $312 per share, with of course a very nice higher low over here for Meta as well. So those right there are going to be some levels to watch. Very nice, consistent higher highs and higher lows, and an uptrend that we have seen for Meta. Talking about Netflix, and Netflix here starting to pull back down a little bit over 2%. Resistance is going to stay put at roughly around $485. Support all the way down to $450 for Netflix, and all the way down to as low as $345, $350. That's also going to be a very important support level. We've got a massive gap to fill for Netflix, which may or may not eventually get filled. But right now, of course, we're coming up to that resistance at the moment. Google, on the other hand, down about 0.5%, so lots of consolidation sideways. So this right here basically been the range within which Google's been trading at. Resistance, like I said, at 139, 144, and support level is going to stay put at 126 for Google at the moment. So lots of consolidation sideways in that range for this company. Microsoft also seeing a pretty significant drop, down over 2%, so coming back down. Again, not a surprise considering there was a little bit of that negative divergence. We're seeing the RSI, we're seeing the MACD come down and roll over, breaking down below 366, and the next support and target is going to be down to $340 per share for Microsoft moving forward. So that right there is going to be that next level and next support level target to watch for Microsoft. And finally, we got Enphase and Costco. Enphase with a very nice breakout to the upside above 120s. We're going to go ahead and turn this level back into a support, which I'm super excited to do. And of course, the next target is going to be all the way up to $131, $132 per share. So that this right here is going to be that next target to watch for Enphase, all the way up to $151 per share for the company. And finally, we got Costco, and Costco here starting to pull a little bit back down, so 1.75% down to $630. We talked about how overbought and overextended it is, so it's not a question of if, it's a question of when it pulled back, and right now we are seeing some momentum back lower. Support level is going to stay put down to $603 per share for Costco. So that's your entire update on the market. Very, very strong momentum coming in for a lot of individual stocks and different parts of the market, but Magnificent Seven I feel like is still struggling a little bit overall. And I think, in my opinion, those 5 to 6 areas in the market, I think, is where one needs to be as rates continue to come down, as I could see a lot more upside and momentum in those parts of the market, and of course in other areas as I'm diversifying away from the US that I covered in my private members only video as well. So hope you guys enjoyed this video, find it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining. And as always, happy investing, and I'll see you all in the next video.